A lot of important concepts to talk about in this video, guys. First, I want to very quickly review from the last Sunday video. I was looking for a short-term bounce. We got a mini bounce over here to around 4,330, which was followed by more downside afterwards. I was looking for a little bit more off of that to around 4,350 or 60. I didn't quite go that high, and we did see momentum continue the downside after that, and we did bounce off of my September 27th date. If you remember this date, I've been referencing this one for a long time now as a major date of interest for a large bottom. And we did get a bottom off of this, which brings us to this week. Listen up to this. We've seen a lot of dark pool prints, which I characterize as being accumulation on the way down. There is a potential that we are bottoming now before a large rally. And you may think that may not be the case, or you may have a bearish outlook on the market just because of all the macro factors and how much momentum we've had to the downside so far. But just for a general understanding, the correction we've had so far has been in a period of bearish seasonality. The back half of September is characteristically very bearish. You see higher volatility. That's just normal for this time of year, especially coming off of the rally we saw in the summer. And I know I have a lot of lines on my chart here, but regardless, we're at the lower half now of a lot of the trend lines that I have in terms of just supports, as well as a key trend line over here, this gray one. This is from the 2018 highs. If you connect the 2018 high pivot, I shared this in the last video, but I'll show you very quickly here as well, so you can match the trend line. But if you connect to the 2018 high, 2020 high as well, you can see it's acted as a resistance as well as support numerous times. As of recently, we are now just retesting this. This is one of the first major retests we've had so far. And this is a very supportive area. Again, not only do we have this trend line here, we also have the 200 moving average around here, around 4,200. We also have, just based on Fibonacci, if you connect Fibonacci, you can see here that we are within the golden pocket as well. Connect it from the top that we've made so far all the way down to the low that we made in 2022, and you can see we are just about entering the golden pocket here soon. Personally, I'd like to see one final flush, ideally this week into early next week, one final flush to around 4,200. That's where a lot of the extra supports are located. We've already hit some key supports so far, like I shared with you, these key trend lines, but if we get a final capitulation, a final VIX pop, that'd be perfect. It would wipe out a lot of traders that maybe added long positions on the way down, and it would also converge with a large supportive area. This also was the previous breakout zone. You can see with my white box right here, this is the previous breakout zone, just based on this gray level. So there's a ton of supportive levels right around roughly 4,170 to 4,220. If we get within that zone, that is a major long opportunity. And it's not only me saying it. If you look at the dark pools, there's been insane amount of accumulation. Like I said earlier in this video, just last week alone, as I scroll down, we saw 1.1 billion here, 2.1 billion, around 432. Nothing too crazy, but definitely a decent amount overall. 2.3 billion at 430. But then when I start to scroll down a little bit more, you'll really start to see some more prints come in. Just 1.9 billion there. But as you see here, really start to get some more premium. 2.5 billion, really starting to tick up here at 427 as of last week, 427.30. And as I scroll down further, you can see the real meat of the dark pool prints was around the 425 level. You can see here 2.9 billion at 425.94, 2.7 billion, 2.9 billion again, and 2.7 billion. This is a ton of premium in a very tight range, just between 425.78 and 425.94, less than a 20-point spread, and you have a ton of premium behind it. I'm very confident that this is a lot of buying. Again, it doesn't have to manifest itself in price immediately after. These tend to be institutions that are loading shares. Remember, dark pool is only shares. So these are institutions likely adding a large amount of shares at these levels in the 425 specifically for a more longer term approach, a potential rally off of where we are right now. That doesn't mean we can't go lower than this in the short term, but in terms of a longer term thesis, especially into end of year, there is a good potential we bounce from around this range, whether it be 420, 422, 425 even, etc. There is a higher probability because of how much we've sold off that these are large buys and we see a bounce from around this range. Again, that can happen whether it starts end of this week or next week. That is the time range that I'm looking for. So this is why dark pool prints can be so important. Whenever you see large amounts of accumulation around a tight range, especially after such a large sell-off in a very short amount of time, you're typically looking at a lot of buying, and a lot of buying tells us there's likely going to be a large move off of this level at some point between now and the end of the year. So that's what I'm watching for at the moment. This is definitely not something that happens without a large move following it. So keep this in mind. This is something that is very key. As I scroll down here, you can see there weren't really that many prints as we went a bit lower. The main portion of the prints from last week, or the key ones, were around this 425 range. So continue to watch dark pools this week, especially if we do get a lower low that prints. That's what I would like to see, a lower low into whether it be the end of this week or early the following week. That'd be amazing for a long opportunity, whether it just be longer term contracts on the S&P 500, selling volatility, or just buying up equities, because a lot of equities have also experienced the correction with the indexes. Regardless of what I choose to do, or if I choose to do all three of those, I am looking for a buy the dip strategy for this week with a rally following it into the end of the year. So my main focus this week is looking for areas that I can accumulate, whether it be leaps, selling volatility, or even just adding equities. Again, I would like to see a lower low print than the low that we saw from over here at some point by the end of this week. That'd be ideal. We also saw that government shutdown news this weekend was pointing at the shutdown being delayed. So there's a potential pop while we see hedges get taken off on Monday. We could see a pop over here back into this box. The key thing is we do want to remain under this box if a lower low does want to print. So whether the market just wants to fill this gap from over here that didn't fill before, because we have a fake gap fill and just a gap and crap scenario, whether wants to fill that and reject, or just stay around here, have some lower price discovery afterwards, whatever it chooses, I'm going to be watching this week, because again, I'd like to load up on some more positions that would profit on upside coming out of October, especially the back half of October going into November. I'd like to be looking for a large bounce throughout that time zone. So my main focus this week is accumulating for that potential bounce that we may get. It seems that institutions are doing the same thing. As you can see here from the shares, I'm fairly confident this is a lot of buying. We saw something similar actually back in March, especially March 15th to 17th. If you remember that date, that was when we bottomed during the pullback that was due to a lot of the banks collapsing, specifically SVB. We actually saw quite a bit of dark pool prints, kind of similar to this, but it's actually less than what we're seeing right now. We're seeing a lot more premium behind it, but we were looking at a couple key like 5 billion or 3 billion plus prints around the low that was on March 17th. And now we're seeing a lot of that too around 425 here. So we're looking at a fairly similar setup that could have a potential rally similar to what we saw after March, which is why I'm so interested on adding positions for this week. So this is my main goal for this week. Again, continue to watch dark pools. If we keep seeing a lot of prints around this range, you're looking at basically a springboard into the end of the year. If they just keep adding billions and billions worth of shares around this level, especially 425. So regardless of that, that's going to be my main focus this week. Again, there's the potential, ideally, we see the lows from September 27th get broken, so roughly 4,238. I'd like to see that get broken this week. Really, the ball is in the bear's court this week if they do want to take it down a little bit lower, because this was a major reversal date, again, that I've had on my chart for a while. I've mentioned it now numerous times on this channel. So this is a strong reversal date for upside. So we'll see if bears are able to get it back under the low, but we've now completed the downward move that I've been predicting now for the past month and a half, 2 months, since around July, that I took that short position around 4,510, and we saw a lot of downside momentum pick up. And now I'm looking to trade basically the inverse of it and ideally get back to around that level back in the 4,500s. I think that's a very viable option, especially going into the end of the year, that we do have completion to the upside to where we previously were. So that's my main goal for this week. Again, watch price action very closely. If we get a break lower than the low from right here, we're looking at around 4,200 is the next key level, specifically 4,156 to 4,200. This is the range of interest. If we get around here, especially the latter half of this week, then I'm looking at accumulation in terms of whether it just be shares, leaps, or just selling volatility. Like I said earlier in this video, regardless, this is what I'm looking for this week, and I'll see you guys in the next video.